Hello, I'm Keith Raven with Berkshire Hathaway Home Services of Northern Indiana, and there are lots of homes for sale in the South Bend, Mishawaka, Granger, Elkhart areas right now. And in this video, I'm going to give you a step-by-step guide on how to use a real estate agent to buy your first home in the South Bend area. Number one to buying your first home in the South Bend area would be to have a regular source of income. I know that sounds very obvious, but you'd be surprised. A lot of people don't believe that they need to have a regular source of income to buy a home, but you do. You need to have a job, or maybe you're a business owner. If you're a business owner, you're going to need to provide the lender with a profit and loss statement. So if you haven't started that, make sure you start keeping track of a profit and loss statement so that you can prove your weekly, monthly, yearly income to the lenders. So when you have a job, you're just going to have to provide to that lender a weekly paycheck stub or a monthly paycheck stub. However you're paid regularly, you're going to need to provide that. So that's step number one, to have a reliable source of income. So the next tip is to make sure you have a debt-to-income ratio lower than 40%. Preferably 35%, 36%, somewhere in there. Now you may be asking, what's the debt to income ratio? Income ratio is a determining factor that the lenders use to make sure that you have enough money left over after your debts are paid, your car payments, your credit card payments, other loans. So you want to make sure you have enough left over to pay back your mortgage. So 35 to 40% is where you want to be on your debt to income ratio, or preferably lower. You get much higher than that and they're going to think that you cannot really afford to pay back this. The way to find that, you can find this out by yourself. The way to do that is take your debts, your total debts, divided by your gross income, and that will give you the percentage of your debt to income ratio. Let's move on to the next step, which is your credit score. So your credit score is another determining factor by the lenders to make sure you've been able to pay your bills and loans back in the past. So your credit score ideally would be above 600. You might be able to get away with a 580 or so. Above 600, you're looking a little bit better. 620 or better. You know, if you preferably can get into that 700 or better, then you have great credit. So make sure you have a credit score at least above 600, 580 maybe at the lowest. There's a little bit more determining factors there that the loan officers look at, but that's the debt to income ratio and your credit score are two large determining factors on whether you can get pre-approved for a home loan. Step number 4 is your down payment. You're going to have to put a down payment towards the loan in order to get a loan. Now, there are some loans that will not require a down payment and they'll have 0% down. That could be some kind of first-time homebuyer program that you might be able to get for a grant, or if you have a VA loan, those you may be able to get away with putting 0% down. A typical down payment is anywhere from 3 to 5%. There are people that put 10% to 20% down, but you know, if you expect to put it down at least 3.5% minimum on your home loan. So let's say you're buying a $100,000 house, your down payment would be about $3,500 or 3.5%. So now let's talk about something called PMI. That's private mortgage insurance. If you can put 20% down toward your purchase of your house, you can get rid of the PMI. PMI is private mortgage insurance that the mortgage company charges to give them a little bit more of a guarantee that you're going to pay back the loan. Again, if you can put 20% down or more, you can eliminate that extra charge and save a little bit more on your money. Step number 5. That is your closing costs. Down payment and closing costs, a lot of people get those confused. Those are two different issues. Down payment, we just explained. Closing costs are the fees that the lender charges for the appraisal. The lenders have to make a little bit of money. The title company has to do some paperwork. So those inspections, there's inspections on the house. Sometimes the real estate agency's office will charge some kind of admin fee. Those are all called closing costs. They're anywhere from 1% to 6% of the loan amount. 3% price on the closing cost. So again, we'll use the $100,000 house example. So you would have your down payment, which was a 3.5%. So then you can figure your closing costs roughly 3%. So that's about $3,000 in your closing cost. So let's say you are in a very competitive, hot market and there's multiple offers on a home. In that case, you want to probably direct your real estate agent to not ask for help with a closing cost. But let's say there's no offers on a house, it's not a real hot market, and it's been on the market for 30 days or so, you can have your real estate agent ask for the seller to pay towards some of your closing costs. So if you can get $2,500, maybe $3,000 on a $100,000 house, some of that closing cost paid by the seller, that's just a bonus and a savings in your pocket at closing, which you can put toward moving, painting, whatever you want to do. So that's what the closing costs are. Repairs, appraisal, the inspections, those can be negotiated after, which we're going to get into on buying a house in the South Bend area, using a realtor. So you've figured out now what some of your costs associated and a little bit of the process of how to get started. This is the real step to get started. You want to get pre-approved for a home loan. So you can use your local bank, maybe your local credit union, or a local mortgage lender. So what they do is they take your income, they take your tax records, they take your pay stubs, your checking account information, and they start to qualify you for a home loan. So they'll be able to tell you how much your monthly payment is going to be, how much you can afford. So they are the ones to determine that, maybe you can afford a $150,000 house, maybe you can afford a $300,000 house, whatever it is. With all that information you're going to give them, that is going to be able to tell them what your loan amount can be and what you can qualify. And then there's FHA loans, conventional loans, VA loans, but they're going to be the ones to help you with the mortgage part, the money part, and how much your payment and how much you can afford. Now you're going to have to get a pre-approval letter from them. If you get a pre-approval letter, what that means is that's a letter that you give to your real estate agent so that he can present that to the seller to say, hey, these guys are serious buyers. They've been pre-approved up to whatever, $250,000. They're serious buyers. So make sure after you get pre-approved, you get that pre-approval letter, because you're going to really want to have that when you present the offer with your agent. So now you're getting into the nitty gritty. You're about to start really searching for a home, because this is step number 7, which is find a local agent, a local real estate agent in the South Bend, Mishawaka, Granger, Elkhart areas. Wherever you're living, you want to find a local real estate agent that knows the area. There's different kinds of agents out there. There's part-time agents that maybe have a full-time job doing something else, and they can show houses in the evenings or on the weekends. And then there's full-time agents that can look at houses any time of the day, the weekends. Generally, real estate agents are paid 100% commission. So who pays the commission is the seller. So that's good news if you're the buyer. So the seller generally pays the commission for both the selling agent and the buying agent. Now, a lot of real estate offices will charge a little bit of a fee for like some admin stuff, but generally it's under $200. And that can be paid at the closing part of your closing costs. So what the agent does is helps you find houses. They will get you in to be able to see the houses. They have these fancy Bluetooth devices that will unlock the doors, and you can go and tour the houses with them. They will negotiate the purchase price with the other agent with you. They'll fill out the forms for you. They'll explain the contract with you. They'll explain earnest money, repairs. They'll negotiate any repairs that the inspections may find when you're buying the house. They'll also negotiate the appraisal at the house, which I'll explain in a little bit, but they'll negotiate the appraisal if it doesn't appraise for the right value. So real estate agents are very valuable, and they can help you with that local market so you can see as many houses as you can and make the right decision for the best house for you. All right, we're gonna move on to step number 8. You found an agent, so the searching of the home is ready to start. You really wanna make sure when you're searching for your homes that you explain and communicate with your real estate agent of what your search criteria should be. So maybe how many bedrooms you want, 3-bedroom, maybe you only need a 2-bedroom, maybe you need a 4-bedroom, maybe you want 2 full baths, maybe you want a big yard, maybe you want a fenced-in yard, maybe you want a pool, maybe you want to be on the river or the lake frontage. Whatever it is, you got to set that criteria for the search and explain that to your agent, and you guys can start your search. A lot of times a real estate agent can set up automatic searches these days, so they'll automatically text or email you when a house in your school district that you want pops up, and maybe it has a 3-bedroom, a 2-bedroom, whatever the criteria is that you gave to your agent, the search results can find. They'll automatically email or text to you. Then all you have to do is text back your agent and go see those houses. Step number 9 is ranking your search criteria. That's really important. I'll be real honest with you. You are not going to find a house that has everything that you want. There is no perfect house out there. You're not going to find a house that has 100% of what you're looking for. So I really highly suggest that when you're setting your criteria, you rank them from the most important to the least important. So maybe the most important is your school district. You want to be, let's say you're looking in the South Bend, Mishawaka, Granger areas. Maybe you want to be in the Penn schools or the Jimtown school districts here in the South Bend real estate market. Stop in areas, so that's what I'm talking about. So maybe that's the most important, so you put that as number one. The next most important is how many bedrooms, so we have that as number two. Maybe the next is a garage or a pool, whatever it is. Rank those in order, and then there's a couple of them that you're going to want to stay firm at, that there's no way you're going to give. You have to be in this school district, you have to have 3 bedrooms, you have to have 2 baths, and you have to have a garage. The rest, I'm just giving those examples, but the rest then are maybe a little bit negotiable. You can give a little bit, maybe you find a house that has all granite countertops and that wasn't one of your criterias, but you love it, so you're willing to give up that extra pool or something. So rank your search criteria from important to least important and make sure your agent knows that and start looking. So step number 10 happens to be my favorite one because I love writing the offer. So step number 10, you found a house and you're ready to write the offer. All right, so you're gonna get with your agent, probably at the house you just looked at. Maybe you'll go back to their office and you're gonna say, hey, Mr. Real Estate Agent, I wanna make an offer, I'm ready to do something. So he's likely going to call that other listing agent and see if there's multiple offers or any other offers. If not, and the agent does not have to tell him that. But if they do, he can come back and say, all right, Mr. Buyer, there's no other offers. Let's be a little bit more aggressive, or there's 3 offers. We may need to adjust some of this a little bit. So you're gonna communicate what your purchase price is gonna be, your earnest money. So earnest money is a down payment saying, hey, I'm serious about this house. I'm not gonna back out. It may be $1,000, it may be $2,000. It depends on that price point. Let's say you're buying a $500,000 house. You may wanna put $3,000, $4,000 down as earnest money. If you're buying $100,000, it's anywhere between $500 to maybe $1,000 as earnest money. That is not an additional cost. That goes toward your closing costs, which we talked about previously. So other things that you need to cover when writing an offer is, if there's no other offers, a lot of agents will ask for some seller assistance toward the closing costs. So remember that 1%, 2%, 3% closing costs that we were talking about earlier? You may want to ask for $2,500 toward pay to your closing cost. Maybe a little bit more, depending on the price of the house, maybe a little bit less, all that. You want to decide if you're going to do repairs. Most of the times you do want to do repairs. You can buy a house as is as well, so you need to communicate with your agent on that. Then you're going to set a closing date. Typically, it's about 30 to 45 days from the time the offer is accepted. So you've got your offer in, you've got your conditions, you got what they're including. Maybe they're including the appliances, the refrigerator, the microwave, dishwasher, all that stuff, pool equipment. All right, so you've got that in the contract. Now the agent presents that to the selling agent, and there's a time frame. Normally it's at least 24 hours. It could be 48 hours depending on your area and how hot the market it is. But I typically do 24 hours response, maybe a little bit less depending on the time of night I get it to them. So they have about 24 hours to respond. They can do one of a few things. They can accept the offer, they can decline the offer, they can ignore the offer, or they can counter offer. Typically it's either counter offered or accepted. Unless you're really going to try to lowball, it's typically not just ignored. But yeah, so you're going to get a counter offer or you're going to get an accepted offer. That's when the agent really starts doing his work. He orders the inspections, the loan officer will order the appraisal, which we're going to talk about here in just a minute, and 30 to 45 days, you'll be getting the keys to your new house. All right, well, thank you for sticking around this long. I am at the final tip here. Let me move the camera just a little bit. I'm at the final tip. You've gotten the offer accepted. Now the agent in the South Bend, Mishawaka area, real estate agent, in that area is going to really go to work, and they're going to order the repairs. They're going to get, typically, you're going to do, you can do lots of different inspections on the house. So a typical one is a whole house inspection and a pest inspection. Those are two very common inspections that a lot of people do. So a whole house inspection is one guy or lady that'll go out and inspect just about everything, the roof, the furnace, the doorknobs, the toilet seats. I mean, they check a lot of stuff, and they'll give a full report back to that agent of what they found. Now you can get with your agent and say, hey Keith, this, and this really need to be taken care of, but I don't care about this other stuff. Or you can say, I want it all done. You know, then there's some negotiating back and forth that the real estate agents do. Sometimes the agents will say, I'll take care of it all, no problem. Sometimes they'll say, you know what, I don't have time, I'm trying to move. What if I just help pay towards some of your closing costs instead of doing all these repairs? So those are some of the negotiations that are happening at that time during that 30 to 45 day period. Another thing that's happening is your loan officer has ordered an appraisal. That is a separate person, not a real estate agent. That is a separate person that comes out and evaluates the house. They look at comps around the area to make sure that you're paying what the house is really worth. If that appraisal comes back lower, let's use that $100,000 example again. Let's say you bought a $100,000 house, but the appraisal only comes back at $90,000. That bank is not going to loan you $100,000. They're saying the house isn't worth $100,000. So your agent comes in, steps in, and you know, you guys have a discussion, but very likely you're going to go back to that selling agent and say, hey, Mr. Seller, we can't buy this house at $100,000. Can you lower the purchase price down to $90,000? So there's a little bit of negotiation. At times, buyers may walk away, the sellers may walk away. That's going to be something you have to decide to do. But really, those are the last steps. Once the appraisal is done, once the repairs are negotiated, you've got about 2 more weeks at that time to close. So that's the exciting part. So, hey, thank you for watching this video. Please share it if you have somebody that is interested in buying a house or just has questions. I'd love to help them. Again, I'm a realtor for Berkshire Hathaway Real Estate out of the Mishawaka office, and I specialize in this area. So give me a call or a text, 574-229-6803. I'd love to help you. Here's my number right here. Thanks for watching. We'll see you on the next video.